Here you are welcome to this lesson. Today we are going to discuss the exercise questions under the manufacturing transfer pricing, right? Manufacturing record. So in the question given, what they have asked is, this is question number 2, right? This is question number 2, right? 3 means 4. Question number 2. So here uh, Kelang Limited manufactures a single product. Goods are transferred from the production department to the sales department at a markup of 20%. Production to sales, production to sales markup is 20%, right? 20% markup, right? Markup. And the following balances have been extracted from the books of Kelang Limited as at 31st December 2015, right? So non-current assets, I have taken the balances here: 400,000 and 350, 120 office equipment, right? Property and plant 400,000, manufacturing plant and machinery 350, and 120 is the office assets, office equipment, and 120, 230, 96 are the accumulated provision brought forward. I have mentioned there, right? And inventories asset, this is I have taken, 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 right? And they had to the raw materials brought forward 24,600, and work in progress 66,800, and opening stocks 162, finished goods 162,000, right? Thereafter direct wages 344,000, right? We have mentioned there. I haven't taken that one, later on we can see. And inventory, additional information, inventory raw materials 28,800, closing stock 28,800, okay. And work in progress 72,000, okay. And closing stocks 186,000, right? So that is I have taken. Depreciation is to be provided as follows, right? Property 5% on cost, property 5% on cost, right? Wait a minute, I will take the depreciation provided as 5% on property 400,000, right? For out of 400,000, what is 10%? 40,000. 5% is 20,000, right? Charge is 20,000, right? And manufacturing plant 20,000 on reducing balance, right? Reducing balance 20,000 in the sense what you have to do is machinery and plants 350,000, 350,000 minus 230,000, 230,000, that is 120,000, 120,000 into how many percentages? What is the percentage? 20%. It is 5% This is 20%, right? This is 15%, right? On equipment, also on cost. This is reducing balance method. Okay, into 0.05 to 6,000 is the depreciation. Office equipment 15% on cost, right? 120 into 0.50, 18,000. 18,000, right? 18,000 is the balance, right? Charge for the year, charge for the month, right? And we had to further, we had to rate the this thing cost and water, and we had to hold that depreciation portion, right? Water and electricity expenses owing to 31st December 2015 amounted to 5,500. Water and electricity owing to electricity expenses owing to 31st December amounted to 1,500, right? So we had to water and electricity. Water and electricity 43,000 and 14,000, right? 43,000 and 14,000. Water and electricity. Water and electricity. See how much? Water and electricity and water and electricity and depreciation on property. Here we can say factory, right? This one we will say depreciation, right? Depreciation, factory and administration, right? Factory and administration, right? Factory and administration. And depreciation on property, depreciation on property. Factory is 70%. That how can I divide this? Factory is 70%, 70 and 30%, right? 70% and 70 percentage and 30 percentage, right? Water and electricity. Water, water and electricity. Electricity is 80 and 20%. 80 and 20%, right? Here this is, there is a balance, right? There is a balance of 1,500 has to be accrued expense 1,500, right? Okay, and now, yeah, now there are no any adjustments. Okay, having said this one, we have to go to the direct wages. Direct wages We have taken 344,000. 344,000. Okay. Direct versus 344,000. And indirect wages 69,000. Indirect wages 69,000. Right. And purchase of direct material. Right. Right. This is also right. Purchase of direct material 287,000. And purchase of indirect material 43,000. Indirect material 43,000. And carriage inwards 3,700. 3,700. And factory other factory overheads 32,500. 32,500. And revenue 1,562,000. Okay. And administrative expenses 374,000. 374,000. Okay. Okay, that is also okay. Provision for unrealized profit, I have made it here, 27,000. And water and electricity expenses 14,000. Water and electricity expenses 14,000. Water and electricity expenses 14,000. For the charge 14,000 plus 1,500 is equal to 15,500, right? 15 if it is 15,500 is 15%, right? 15,500 into 0.8 is 12,400. 12,400. 12,400 and 3,100. 3,100. Admin, we had to say water and electricity 3,100. 3,100. Because accrued expenses, this is paid. This is accrued, right? This is paid. This is accrued. ACCRU accrued expenses, right? So, right, and 3,100 taken here, and 12,400 should go to the 12,400 should go to the overheads, factory overheads. So that also we have done. And depreciation of property. Depreciation of property, they say how much it comes? 20,000, right? 20,000. Then they say 70% is for the factory. 7,000, 7,000, 14,000 for the factory, and 30% for administration property, right? 20 and 30, right? Understood? Sorry. Here they says administration expenses it should go 20%. 20% is 30%. 30% is 3,600. Depreciation property is 6,000. Here depreciation property is 6,000, right? Not 6,000, 12,000, sorry, 14,000. 14,000. 14,000, right? And other than that, they haven't given any other adjustments here, right? So no any other information given. So we have to take other depreciation is plant and machinery. Plant and machinery 6,000. Plant and machinery, right? And office equipment, we have to take whole thing 18,000 to office equipment, right? 18,000, right? Okay, 18,000. Okay, sir. Direct on the cost, right? On the cost they said. So we have taken this also, right? This also. Okay, finished now. Halas. Now we have to see the provision method. Provision. This one also, depreciation also we have calculated. This is unrealized profit. What is the closing stock of finished goods? 186,000. Closing stocks. Closing stock of finished goods. How much? 186,000. Right? And 162,000. You had to add this. Before adding, we used to say this is 100. Closing stocks 186,000. Then if it is 186,000 divided by 100 and 15%. 100 plus this is equal to 100 plus 15%. 115, right? Into 100. Or can say 186,000 divided by 100 into 20. It is 37,200, right? This is 100%, right? Then margin with margin, closing stock with margin, right? It is. Then if it is a closing stock margin is 37,200. 37,200. Then you had to, here you had to say carry it down 37,200, right? 37,200. 37,200, right? Here brought forward 37,200. This is 80%. This is 20% profit. Right? Shall we add this one? Okay. Here 24,600 plus 287,000 plus 3,700 equal to 315 315,300, right? From that we had to minus it 28,800, right? 286,500, right? Direct wages 344,000, right? Plus 344,000 630,500, right? Right? And we have to add this, sum up this one, 32,500 plus 43,000 plus 12,400 plus 14,000 plus 6,000, 100 and 107,900, right? 107,900, right? 1000 plus 66,800, right? 66,800 plus 630,500 is equal to 805,000, 805,200, right? From that we have to deduct 72,200, right? Then 733,000, 733,000. We have to calculate 733,000 into 0.2, 146,000. Margin is 146,000. Closing work in progress. Closing work in progress. Profit margin. Right? 72,200. 72,200. Right? This will go to 733,000. Right? Then profit margin 146,000, 146,600. Then cost of goods sold, right? Plus 733,000, 879,000, 879,600, 879,600, right? Plus opening stock 162,000. Then it will come around 1,041,600, right? From that 186,000 we had to deduct it. Then 855,600 is the cost of sales minus 1,562,706 400 is the gross profit, right? 879,600 into 0.2 is 175,200, right? Okay, so this is up to this one, we have balanced it, right? 100 plus 15%, right? This is okay, we have balanced that one and we have brought it, right? Cost of margin is 15%, right? Closing stocks, how they have mentioned, closing stocks and opening stocks finished goods at transfer price 162,000, opening stocks at a transfer price at 162,000, right? In the closing stocks they haven't mentioned at what price. Finished goods at transfer price, right? This 186,000 is 100% plus 15%. 100 and cost 100% and 15% margin, sorry, 20% margin. Sorry, we have made a mistake. 20% of margin, not 20% of margin, right? 20%. So this is 120. 186,000 is divided by 120, right, into 20%, that is 31,000. Margin is equal to 31,000 is the margin carried down, right? Then margin carried down is 31,000, right? 31,000, right? 31,000, 31,000, 31,000. Why? 20% is the margin. 186,000 contain the transfer price of 20%, right? We have to calculate the 20%. Then transfer price has to be eliminated. So we have 186,000 is the 120%, 100, right? Then margin is 186,000 divided by 120 into 20, that is 31,000. Understood, right? 186,000 divided by 120 into 20, 31,000, right? Finished. Then 31,000, then the difference is brought forward balance is 27,000. 27,000 in the sense how 162,000 divided by 120 into 20, it is 27,000. So this is closing balance. Closing stock, finished goods, closing, opening, right? Opening stock, margin carried down, right? Opening stock is finished goods is 162,000, which is 100% plus 20%, right? Then with margin, okay, with margin, right, of 20%, okay. Then brought forward margin should be 162,000 divided by 120 into 20, that is equal to 27,000. See, 27,000, it is telling, right? So this is 1, this is 2, this is 1, this is 2, right? The difference is profit and loss. Profit and loss, unrealized profits, there is an increase in unrealized profits, that is 3-4,000. Increase in profit and loss account, that is we are suffering a loss, we have to reduce it, the profits. So gross profits should be reduced by, gross profit is 706, right? Unrealized profit 4,000. 4,000 we have to reduce it, right? If we reduce it by 4,000, 706.4 minus 4, 702,400 is the balance, right? 702, this has to be reduced because this is the credit balance, right? And here we will say 374 plus 3,100 plus 69,000 plus 6,000 plus 18,000, that is 470,000. 470,100 is the expense. Then minus 702,400. 232,300. This is the net operating profit. Net operating profit, right? This is the net operating profit. We have arrived, right? Have you understood the story here? This adjustment provision for unrealized profit. Opening balance they have given. Crossing unrealized profit we have calculated. And we have reconciled the opening balance also. Opening stock they have given 162,000, which is contain 115%, 120%. 120% is 162. Then how is the 20%? We have it is telling. This amount is telling, right? This amount is telling, right? This amount is telling. This amount is telling. This amount comes here. This amount goes here. Right? Like that we have calculated. And what the requirement is, we have to see the requirement, whether we have answered the requirement. Prepare the manufacturing account for the year end. Yes. Prepare the income statement for the year end. That's okay. Explain why finished goods inventory is not shown at transfer price in the statement of financial position. Why we should not show in the transfer pricing in the financial position they ask, because the international accounting standard says closing stocks should be valued at lower of cost or net realizable value. Because of that, we don't show the transfer price value of the stocks in the balance sheet. Okay, that's all finished discussion. So I hope to see you in another question and answer session in next uh, session. Okay, so I hope you would enjoy, and if you have any question, you can ask me and I can clarify those things. Okay, these statements, these are workings, right? These are workings, so for your understanding purpose. Okay, thank you. Hope to see you in next lesson.